The broadcast is now starting. All attendees are in listen-only mode.
All right, guys. All right. Welcome to the weekly webinar. This is Neil Green again with you, just like every Wednesday. Been doing this webinars twice a day. The first one takes place at 8 a.m. at GMT time, and the second at 4 p.m. GMT time. We're doing the webinars every week by GMT time, since we have customers from all over the world, and we would like to give all of you a chance to listen, talking about the events of the same week, in order for you to know how to take your trades to make some money. This is what we're here for, right? So I've been doing it for years, to educate you every Wednesday and give you the opportunity to get all the information needed for you in order to trade. Just want to do a technical check with you guys on the webinar. So welcome, and I would like to welcome our Facebook users at fmfx.com joining us today on a live session. So welcome everyone, and just let's do a technical check. You have a chat window. Of course, if you have any questions during the webinar, you're more than welcome to ask me. Just write down on the chat window that you can see my screen and hear my voice before I start. Just a technical check to see that we're good. All right. Of course, I'm going to leave some time at the end of the webinar for some Q&A session, questions and answers, for all of you to get the chance to, to clarify everything. And if we're good, then I'll start. Okay. Let's go on. All right. So this is, of course, our homepage, okay, at FMFX. And let's start. This week, what's going on? Actually, today we have the FOMC Minutes, all right? This is what I'm going to talk about. Now, the FOMC Minutes will be published today at 7 o'clock at GMT time, 7 o'clock p.m. at GMT time, so pay attention what time it is at your clock, okay? It's going to be published today. The FOMC is the Federal Open Market Committee. As you probably know, the Fed, okay, they're responsible for the Fed interest rate. So the FOMC actually stands for the 16 members of the Fed. The Fed is the central bank of the United States. As you probably know, the US economy is the strongest and most important economy in the world. And these members, they actually decide whether the interest rate will go up or down. Right now, interest rate in the United States stands on 0.75%. Janet Yellen, she's the head of the Fed. She actually, with the other 15 members, make the decision whether the interest rate in the United States will go up and down. And of course, it affects the market strongly. Okay, usually when interest rate goes up, we're going to see the main currency, in this case the US dollar, getting stronger. The stock market usually get weaker. Okay, think about it. If you have like $100,000, if interest rate would go up, you would put the money in the bank and get more money non-risk, without risk. And when interest rate goes down, people will take the money and put it in the stock market, and then we're going to see the stock market going up, which right now we see the US dollar and the stock market goes up because of the Trump policy. Talked about tax cuts, we talked about it in last webinars, and government spending. So right now the market is booming at the highest point ever, and we're going to see it later. Now the group of FOMC members discuss 8 times a year the economic situation in the US. 3 weeks after each meeting, the protocols, which we can call minutes as well, are published, all right? Why is this important? It's important because, as you probably know, and if you don't, I'll tell you, we have 8 interest rate decisions a year in the United States. Four of them is followed by a press conference that takes place just 30 minutes after the interest rate, all right? Getting the bigger picture, just for you to understand, interest rate, okay, went down from around 5.25% to 0.25% after the big crisis in 2008. Okay, the big crisis in 2008 made the interest rate go down, and it stayed the same way for around 7 years until December 16th of 2015 was the first time that the Fed, the American Fed, realized that the US economy is getting better, and then interest rate went up from 0.25 to 0.5%, and the second time took place on December 14th of last year, which was 2 months ago, of 2016, when interest rate went up from 0.5% to 0.75%. These two times were followed by a press conference. So pay attention to this. Okay, just to show you what happened in the market, let's open the MetaTrader and take a look. Okay, so let's take a look at the main indices, for example. The Dow Jones. Dow Jones is the oldest and the biggest index. I mean, just gives us the mirror for the US economy. The oldest index in the United States represents the 30 companies with the highest value of industry, that low tech. As you can see, during 2008, this is a monthly chart, which means that each candle that you see here on the chart represent 1 month. Now this is from January 2008 all the way down to February of 2009. You see the huge crisis, right? Stock market just broke down, went down, crashed, okay? And since 2009, we have a recovery. You see, the stock market is going up, okay? It's going one way. And looking at this, look what happened since the elections here at November. The elections in the United States took place on November 9th of 2016 when Trump was elected, and he came into power on January 20th. As you probably know, he's the president right now. And the stock market in the last 4 months is really, really strong, at the highest point ever. Okay, the US economy is in a great shape, great situation. Look at the NASDAQ represents the 100 companies with the highest value, S&P 500, same thing, okay? Highest point ever. Market sentiment is very, very positive at the moment, just for you to get a bigger picture. Back to the PowerPoint. Now, 3 weeks after each meetings, okay, when we have interest rate, we have these minutes, these protocols of the FOMC, of the Fed members, published. Okay, when they publish, it actually gives us, we're gonna know, or we're gonna get the expectations of the Fed on future hikes of interest rate. Just to remind you, we're talking about 3 potential interest rate hikes in 2017. And the last one was on December 14th. Look at the reaction of the market. Let's take a look on the US dollar, for example, right? US dollar versus whatever, the Japanese yen. This is a daily chart, which means that each candle represents 1 day. You see this green candle right here? This green candle represents December 14th of 2016, the last time that interest rate went up from 0.5% to 0.75%. You can see the reaction of the market just gave us huge opportunity, guys. We made a lot of money here. We're talking about almost 300 pips, okay, which is a lot in the market and the forex market, and this was a huge opportunity. Now we're talking about 3 hikes, okay, expected to be in 2017 after 2 hikes in almost a decade. So it's a big deal, okay? It's a big deal, and the protocols, the minutes that we're going to receive from the FOMC, from the members, will be on the last interest rate decision. That was actually the first one that took place on February 1st. Interest rate stayed on 0.75%, but it was not followed by a press conference. As I told you, we have 8 interest rate decisions here. Only 4 of them is followed by a press conference of the head of the Fed, Janet Yellen, talking about around an hour, 30 minutes after the decision, talking about the future and about what she and the Fed took under what they considered before the decision. Okay, so it's very important to pay attention to this. Now, okay, global interest rates are extremely low. As you probably know, in the Western world, in the United States, it's 0.75%. In Europe, it's 0%. In the whole Western world, we're talking about between 0.1% to 1%, no more than that. It's very low. This is one of the reasons that the stock market is very high, as you saw. Okay, indices are at the highest point. All stocks traded very high. Interest rate, when it's low, people don't put their money in the bank, but they're gonna get nothing from this. And all the big corporations and investors put the money in the stock market, especially after Trump, you know, is trying and is doing it to to leave everything domestic. What is doing is canceling some trade contracts with other countries, with China and other countries, in order to try to make the Americans, stay in the U.S., manufacture in the U.S., and it means more salaries for the Americans. Cut taxes, which means people and corporations are gonna have more money available, and they can buy and consume more. And this is why we see the reaction of the market that is so high. Now, the crisis of 2008, I'm sorry, that I just showed you on the chart, was the trigger for lower rates. Okay, the market crashed, lower rates went all the way down to 25% back then, and that was the reason. Now, the U.S. would be the first country to start recovering from the crisis. Okay, the whole world, the whole market is following the U.S. market, and it's extremely important. Now, that is the reason rate decisions in the U.S. are extremely interesting. Investors will try to understand today if the meeting of the FOMC on February 1st, remember, was the last interest rate decision, the first one of 2017, and we didn't have a hike. Remind you, we're expecting 3 hikes, was positive or negative. So today, exactly at 7 p.m. GMT time, okay, pay attention what time it is from where you're from. You're going to see a strong reaction. Usually, this is what happens of the market, followed by these minutes, by these protocols of the Fed, of the 16 members of the Fed, talking about the futures, talking about expectations for hikes. And the Fed should hike rates 3 times, as I said, in 2017. The next decision will take place on March 15, right? So we're talking about less than a month, 3 weeks from now. Right now, it's 3 weeks after the interest rate decision on February 1st. This is why today, at 7 GMT time, we're going to get the FOMC minutes that are going to give us a great opportunities to trade. And the next decision will take place on March 15, which means that actually, it gives us the mirror for what's going on today. And we're going to have, it's going to be followed by a press conference 30 minutes after, reminding you again, the 2 last hikes in the past 7 years, 2 months ago and a year and 2 months ago, okay, was followed by a press conference of Janet Yellen. Now, a good minutes today could raise expectations for a rate hike on March 15th. If interest rate goes up, of course, it's great for the US dollar. Higher rates usually affect the related currency and banks. Okay, high interest rate is great for the currency. Okay, investors from the outside are coming. Stock market is stop climbing, but the US banks are getting stronger. Now, why is that? Think about it. If interest rate goes up, it means that banks give out loans, make more money out of their loans because interest rate is higher. Okay, interest rate is the price of money. If the price of taking a loan is higher, right? If interest rate goes up, people would put the money in the bank and would take less loans, but US banks will make more money. Assets to trade on include US dollar versus all majors, Euro, Japanese yen, British pound, whatever you find interesting. US banks, of course, and the metal commodities such as gold and silver. Just to remind you, gold and the US dollar, usually they work in an opposite correlation, which means when the gold actually is the parking lot of all currencies. During the Brexit, for example, on June 24th, when the pound got weaker, really weaker, okay, gold went up. So when the US dollar is getting, let me show you, you know what? Let's take a look on the market. This is the US dollar since the elections. This is a daily chart. These are the elections, you see, November 9th. At the beginning, US dollar got weaker for about 2 or 3 hours because everybody expected Hillary Clinton to be a president. And when we have uncertainty, when Trump was elected, it was a big surprise. We have a lot of surprises. The Brexit was a surprise. Trump is a surprise. The world is going right. And what happened, you see the reaction, and then he gave his speech, and since then, the US dollar got stronger. Interest rate went up from 0.5% to 0.75% here on December 14th. All right. Looking at gold, we're going to see the opposite reaction. This is gold XAU versus the US dollar. Since the elections, it got weaker. Right now, the dollar got a little bit, because the US stock market is going up, it got a little bit weaker, and gold's going up, right? Looking at, let's take a look at the Dow again on daily chart. Since the election, the stock market is going up like crazy. You see this small red candle? This is December 14th, as I told you. Okay, since the elections, the U.S. stock market got stronger. After the interest rate went up from 0.5% to 0.75%, people put their money, investors put their money in the banks on non-risk to get more. Stock market, the uptrend stopped for a few days, but it didn't stop it because, as you can see, the highest point ever and still booming up. All right, just to give you a general picture, U.S. banks are traded at the highest, almost highest point ever. Let me show you the main ones. Citibank traded very, very high at $60 per share. Looking at Goldman Sachs, traded at $250 per share. Look at this. Let me zoom out just for you to understand. Highest point ever. JP Morgan. Show you JP Morgan, no problem. JP Morgan. So the banks have very strong correlation between them because most of the US banks are domestic, and interest rate right now is expected to go up. We talked about 3 hikes in 2017. So these are great opportunities, all right, to buy the market. I think whatever, take a look on Apple, for example. Look at what happened. Highest point ever, okay? The whole market, Caterpillar, okay? Trump talked about rebuilding America on the elections. Elections here, gap up, boom, it's going up. Facebook is going up these days. Okay, and everything, the whole market is getting stronger. So if there's any time to go into the market and trade, it's today. Okay, more than that, I'll tell you that the FOMC minutes today at 7 GMT time, we're gonna generate huge opportunities. Right, you can check it on all financial news websites such as Nasdaq.com, CNBC, whatever you like to look at the headlines. Now, if you don't know how to read the headlines, no worries. Go to the MetaTrader, look at the chart, okay, and identify, try to look at the trend. Now remember, the trend is your friend, okay? Big money knows what it's doing. If you see the reaction, if we have a positive reports, positive minutes by the FOMC members that will be published today, and the meeting took place on February 1st, of course, after the interest rate decision. Okay, we're gonna have, of course, a strong uptrend and the opposite. So US banks, US dollar, let me show you again what to trade on. US dollar versus majors, US banks, and gold gonna gives us great opportunity. Now market sentiment is very positive these days. Okay, very positive, not a lot of tension. It's very clear where the market is going again. Dow Jones daily chart, each candle represent one day, very green, going up, highest point ever. Nasdaq, boom, is going up. S&P 500, okay, everything in the United States is very, right now we have a very strong uptrend. This is the sentiment, very positive. The current market probability for a rate hike on March 15 by all analysts is 32%. So we talked about 3 hikes of interest rate in 2017. You can write March 15th. I'm going to do a webinar about it at the same day. So write it down to yourself. I think it's the most important webinar during March, okay? Put it down. It's going to be the second interest rate decision after February 1st, but the first interest rate decision followed by a press conference of the head of the Fed, Janet Yellen, 30 minutes after that. And reminding you again, 2 hikes on December 2015, December 2016 since the crisis in 2008. That interest rate went up by 0.25% was followed by a press conference, because then it gives the Fed the opportunity to explain the decision. Now, US banks and indices, as I showed you, are close to their record highs. Of course, good luck, guys. All right, time for questions. If you have any questions, would you like me to clarify anything? You have a chat window. This is the time. Ask me. Of course, you're more than welcome to email me during the week. I'm doing the best I can in order, to answer all your emails and to inform you on the market. And okay, and that's about it. Okay, I'm really glad for the emails that I received this week. For the people making money using these webinars, it's for free free for you guys. You guys on Facebook, if you don't have an account with us yet, okay, please join us. This is the time. I think it's the best time of the market ever to trade on. Join our webinars, okay? Contact our account managers. They're gonna give you more information about what's going on in the market. Don't just leave your money in the bank. This is the time to make money here, okay? Any questions, guys? Okay, next week, by the way, you have a link on the Facebook, on the fmfx.com Facebook page. You're more than welcome to click on the link and join for free, of course, to the next webinar that will take place next Wednesday, talking about oil. Okay, oil inventories is a weekly event, takes place every week, and I'll do the best I can in order to teach you how to trade it now. Okay. Okay, Carol is asking us, hi, I'm a beginner. Could you please show me how to predict the direction of the market? Thanks. All right. If we're talking generally, okay, looking at the indices, it's pretty easy. It's going one way, it's going up. Okay, I don't have to predict it. I can show you what's going on right now. We have a very strong high uptrend, highest point ever. It's pretty clear what to do. If you want to trade on the US dollar, for example, okay, sorry, if you want to trade on the US dollar, just a second. Okay, let's put it here. If you want to trade on the US dollar, what you have to pay attention today at 7 p.m., look at the news. Look at all the websites that gives us financial news, okay? You can find it on Google, no problem. And try to understand whether the protocols from the interest rate decision at February 1st were positive or negative. Pay attention to what the Fed of the members said about 3 hikes, when it's expected, okay? Pay attention to what they're going to say about the interest rate decision on March 15, okay? Of course, higher expectations for interest rate hike is generally positive for the US dollar, negative for gold, and positive for US banks, and the opposite. Pretty easy. Okay, if you want to know technically how to do it, just contact your account manager. He's going to give you all the information about how to technically use. I'm going to do another webinar, by the way, next month, just about technical analysis in general. Okay, so it's going to give you opportunity to know where to put your key levels, such as support, resistance lines, and so on. Right? I hope I answered your question, Carol. You're welcome. Okay, we have another question. Oil seems to be very volatile. I'm down quite a bit right now in my position. Do I just wait? All right. I don't know if it's the time to talk about oil in general. I'm going to do it next week. First of all, join our webinar next week. It's going to talk about oil. So it's very, very important to you if you have a position on oil. Just to show you, where is CL? Second, show all. There you go, oil on a daily chart. You see the support and resisted lines, just to give you in general, at around 52 and a resistance line around 54.5. Okay, you see right now we have a sideways trend. We have to wait for the next OPEC meeting to understand if they're going to cut product or not. I'm going to talk about it next week, right? Join the webinar next week. I'm going to give you all the information for about 30 minutes on oil. It's very important for you if you have a position on oil, okay? Same time. Yeah, it's going to be same time. I'm doing webinars every Wednesday, twice a day. The first one is at 8 a.m. and the second one is just like now at 4 p.m. GMT time. Okay, and guys, use the opportunity today for the protocols from the FOMC, talking about the future and see the reaction of the market and go with it. US dollar, US banks, and gold, opposite correlation. Okay, so thank you very much for participating. You're welcome to email me if you have more questions. And you guys from Facebook, welcome and join us. Okay, thank you and have a great one. Thank you, bye-bye.